everybody? It's your man Jay Life. We're back again for another one here. Let's go. We're going to jump right into the charts. That's what it's all about. I know you guys want to hear this one. This one's talking about the M's, the W's, and the V's. Common patterns in the market that are literally repeated over and over and over. Once you're able to see them, you can't unsee them. Once you're able to see them, I'm going to teach you how to trade them. Once you know how to trade them, you know how to take advantage and make some money off of these patterns. They're everywhere, all day, every day, literally. Before we jump in, though, don't forget to hit that notification button. Don't forget to hit that like button or that subscribe button so you'll get updated and notified whenever we're about to drop a brand new video. And there's tons more coming. Tons, trust me, tons more coming. We usually post on Monday, Wednesday, and Friday. But I'm going to be posting the weekly recaps on Sundays, so look out for that. I think I'm going to I did Euro USD last week. I'm going to do Euro JPY this week, and I'll let you know what we're going to do for the whole week when it comes to the trading there. So we're going to jump right in with the M's, W's, and V's, how to identify them, what to do with them, what to look for, and how to take advantage of these patterns. They're literally everywhere. So we're going to start today on USD CAD 4-hour chart. USD CAD 4-hour chart. Obviously, everyone knows what an M looks like. That's an M right there. And everybody knows what a W looks like. I guess unless you're in a different country, then it may look a little bit different. Just kidding. Let's go. So there's a W right there. Boom. Most important. And then let's start a V too, just so you guys can see it. Everyone knows the V. Boom. All right. So you got your M, your W's, and your V's. M patterns. M patterns usually are signals of either a double top sometimes, usually a bearish opportunity. But the most important one of these off of these M's and W's are the neckline. The neckline right here must be broken. They call it a break of structure, BOS, kind of a violation, depending on what you want to call it. Once that happens, then you got an opportunity to trade from this area. And then with the W's, same thing. Market comes down, gives you a pullback, drops down again, breaks structure. This would be the area here where you have an opportunity to take a buy in the other direction. And then with the V's, you guys have heard of V-shaped recoveries. They talk about all the time in the stock market. It actually happens there pretty often. Market drops down, woo, boom, hits the bottom and bounces right back up to at least that same height. The way you trade those is you got to break the structure here. You got to break above here, retest it, and it's time to go. So that's a V-shaped recovery. And obviously there's the upside down V, same concept. All right, so let's jump right in. You guys can see them on the charts now. Let's put them inside the live chart. So here we go. This is a trade right here, right now. I'm going to be taking this trade next week. This is USD CAD. This is my top. So I'm not ignoring this, but I'm essentially going from my high point to my low point to a pullback to that low point, and then we're at the current market. It is closed. I'm looking for this to happen. There's my W right there. Looking for this market to pull back in this area and maybe give me an entry. So what I do once I find that information, I'm going to zone up my highest candle right there. So you guys see that candle right there? I'm zoning him up. I'm expecting this market to come back down here, potentially give me a retest and keep on pushing, as they say. So that's a W pattern. They're literally everywhere on every time frame. So don't get fooled though, because there's some other patterns. Here's a W right here. And if you look at that W right there, did it break the neckline? No. So what I mean by break, the candle has to close above the neckline. So this could have been a fake out if you weren't a seasoned savvy trader. Market continued right on down. It wasn't until over here that it actually broke that neckline. And as you guys can see, this is almost the same area as this one. This is a pretty good indicator that this could be really, really, really nice right here. Next week, take that buy. All right. So that's the W. That's the W. Doesn't matter which time frame. Doesn't really matter which market. Patterns are everywhere. So that's the W. Let's take a look at, see if we can find some M's. So let's see if we can find an M. I like this M right here. So if you see this M, look at this. Boom. Market pushed up. We pull back. I'm going to ignore this really quick. we pushed up again, and then we finally broke below. I'm not ignoring it. We just went up higher. So I want to start from a low point to a high point to my pullback. I want to go to the highest point and then down to the lowest point. So we broke this structure right here. So you know what I would do? I would zone up this whole area right there for potential sell opportunities. And you see the market broke below, gave you a beautiful wick entry retest, no drawdown, and the market promptly dropped for about 123 pips of pure pleasure. Amazing, amazing trade right there. And all you did was identify this key area, which is the neckline of this M. And so far, I got one waiting for Sunday. And then I have this one here in the past. I want you guys to be able to identify these and really take advantage of them. Are you going to win every trade? No. But once you're able to identify these patterns, it happens over and over so much that you're definitely going to have a lot of success being able to trade these. So that's the M pattern. That's the M pattern. I'm sorry, that was the M pattern there. And low point, high point, pullback, stops here, break a structure, retest. So the most important thing, though, you definitely want to stick with the trend. We're trending up right now on USD CAD. So we did catch this sell right here, but you can't stay in this trade forever. You saw this big push up right here. The likelihood of this falling all the way back down here was very, very, very low. Let me just say that. So you got to know when to get out of this trade. And if you have any questions about that, I got a video about entries. It's going to be popping up on the screen right there. And you'll be able to take a look at where to get in, where to get out of some of these trades. All right. So like I said, it doesn't matter which time frame. When I started trading, the reason why I started trading the market structures because I wanted to be able to trade in any market at any time. Some strategies only work for certain time frames or certain markets, but you can trade market structure anytime, any market, any pair, any commodity, any indice, doesn't really matter. Market structure is always going to respond to itself. All right, so here we go. So let's jump down to a different time frame. We'll go down to the scalpers. Let's go down to the scalpers. We'll go down to the 5-minute time frame, and we'll go to a different pattern too. So I have IJPY on the 5-minute chart right here. I have a beautiful opportunity for you right here. Let's take a look. This is my W. Boom, 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 boom. You guys are like, oh, it didn't break right there, so that doesn't count. We broke right here. That does count. Boom. I zone up the full candle and look at that entry. Woo! 5-minute chart, you guys. I mean, if I can get an entry on the 5-minute chart that pushes up almost 50 pips in less than an hour, I'm taking that trade every single time. That's absolutely amazing here. So one more time, let's go over it. You got your drop. Here's your pullback. Here's your drop. Did we break structure? Nope. We broke structure over here. Retest. Boom. You in there and you're winning. So here's a little caveat. I'm gonna give you a little secret right here. Here comes the secret right here. Get ready. All right. So as you're looking at this W right here, I've been telling you to trade the neckline, right? Trade the neckline. Once you break the neckline, guess what? You can also trade the starting point. So that candle that started the W, once you break structure on that one too, look at that. Boom. Oh my God, that is beautiful. Look at that trade right there. This is a 5-minute chart, you guys. If you caught this on a 5-minute chart, this thing ran up over almost 100 pips in about an hour and 20 minutes. Who wouldn't want 100 pips in just less than an hour and 30 minutes? All based upon this W pattern. I mean, it's so powerful. There's so many ways to trade it. I'm just showing you two right now, the most simple ways, but there's other ways to trade it too. But if you missed this one right here, they gave you a second opportunity. The trade was so nice, they gave it to you twice, and they gave you over 100 pips in that trade, or almost 100 pips, depending on when you got in. Either way, once you're able to identify these M's and W's, it's going to change your trading forever. Trust me. Once you see it, you can't unsee it. All right, so that's the 5-minute time frame. I told you can trade it on any time frame. High time frames, the daily. I mean, we can go to the monthly if you really want to. It's the same thing. The weekly, it doesn't really matter. But I'm going to show you the V pattern really quick. So the V pattern right here, you guys can see it. Boom. Sharp drop to the bottom. Boom. Pops right back up. Boom. Beautiful opportunity. And so how you trade these is the same way. You're going to start with the top of that. Zone up that whole candle. Wait for a break of structure. Like we got right here. And you got an entry right here to push that market back up. Now this is the weekly, so obviously the pips are going to be way, way bigger. But I'm just kind of showing you an example. Once you got that clear right there, boom, market pushed up and you ran all the way. All the way. And honestly, if we wanted to get really, really pinpointed, that V actually started right here. Boom, you see? So we pull down, we pull back, market dipped right there. So once we broke the structure here, boom, broke the structure here. There was your retest opportunity in this market. Shot off to the moon. Sheesh. I mean, this is the weekly chart, you guys. You really literally got 12. Let me go higher. We got 1,200 pips out of that trade. Just being able to identify the V-shaped opportunity. 1,200 pips. Of course, it took 203 days now. It took more than half the year to get there, but it's still a lot of pips and a good opportunity. Once you got in back here, you were chilling the rest of the year. I mean, you got in October of 20. Man, you just rode that thing all the way up. And so once you're able to identify these patterns, trust me, it's going to change everything. You got to have the break. You got to have the retest. That's important. The break and the retest are very, very, very important, because that's going to be a confirmation that the market is potentially ready to go in the opposite direction. If the market would have come back up here and rejected, then this thing would have sold right back down. And you can trade that way also, but today we're talking about break of structure. And we're talking about BOS violations, whatever you want to call it. We're talking about those. So once you're able to identify those, then you can actually make better decisions on your trades and take them with confidence too. Because are you going to win every trade? No. No one wins every trade, but you're going to win most of your trades. And you're going to win the vast majority of your trades when you go with the strength or the momentum of the market. The market, once it makes a decision, it usually moves in one direction. Once you're able to identify that and go with it, that's when you're usually going to win most of your trades. When you're trying to get in and decide which way it's going to go, no. Let the market make a clear, distinct move, and then you take advantage of that move. All right, so that's the M's, that's the W's, and that's the V's. You guys let me know which one you like to trade the best. The V's are the easiest to see. The M's are bearish reversal patterns, and the W's are bullish reversal patterns. You got to have that neckline, got to break that structure, got to get that retest, then you get in that trade and you smile all the way to the bank. All right, everybody, let's go. We'll see you on the next one.